The Land Bank, which this year celebrates its centenary, has reported on its annual performance. The parastatal's revenue slipped by 39% to hit just over 161 million rand. Its loan book grew by 54%, with non-performing loans down an encouraging 22.5%. In studio, Lebogang Seriti, he's Chief Financial Officer at the Land Bank. Welcome, Lebogang.
Thank you. And
congratulations, because it's been a steady clawing back of the Land Bank, and I think there's some legacy issues in terms of reputation. Do you think you are shaking those off?
I think we are shaking it off. I mean, this year, it's in respect of performance, and we believe that the first year in which the core business actually added to performance of the book itself. At a group level, I mean, if you exclude the impairment releases which we had last year, we effectively, when you compare the 2 years, this year and the previous year, we effectively made an increased income of 33 million, which represents an increase of 26%.
So the loan book growing by 54%. Is this market share growth? We know it's hugely competitive there in the private banking sector. They're all fighting it out, and we keep talking about unsecured loans. But in the agricultural market, are you elbowing your way in there too?
We are elbowing our way in there, but I think what's positive for us, we don't do any unsecured lending. All our lending is either secured by the farms the farms belong to the farmers or the actual produce itself. Right. I think, but what is positive in respect of ourselves is that it's the loan book growth was in respect of us actually being able to obtain market share from our competitors, but not obtaining market share from competitors by reducing prices effectively, offering cheap rates, but by offering innovative financial solutions to our clients that's allowing us to actually increase our net margin.
You've got a target market share in the agricultural market of 35%. Where do you stand now in your estimate?
We believe that we're currently at 31%, but it's a moving target given the sense that the agri-market is growing about 10% on an annual basis.
What's your feeling of the performance of the agricultural market? There's so many issues at play: agricultural prices, drought-related issues, and then food security playing that role. Do you feel that you are a role player in ensuring food security for South Africa?
We believe that we're a significant role player in ensuring food security in South Africa, because we provide, firstly, we've got a 31% market share now, but we provide most of the on-lending facilities to agricultural co-ops, which they on-lend to farmers. I mean, outside of most of the big agri companies, only 2 agri companies that we currently don't, which are currently not our clients.
Is there a tension, and I think this has been a great deal of the criticism and perhaps where things went wrong for the Land Bank in the past, the tension between being a development finance institution and having to worry about things like food security, job creation, etc., and still being profitable?
We don't believe it's a tension, but I think it's something that it's a delicate balancing act that we need to ensure that we trade carefully. In respect of the tension, I think we've always indicated that in trying to meet our commercial objectives while at the same time being a DFI, we've always indicated that there will always be a cross-subsidization amongst the 2 different units. Hence, we recently announced that we've recently put in place a wholesale financing facility that gives money to emerging farmers at a subsidized rate in conjunction with the Department of Agriculture. And that effectively means that we're able to subsidize emerging farmers using the profits that we're making on the commercial side.
You talk about funding. How many years ago was it that you got the 3.5 billion rand guarantee from Treasury? Was it 2-3 years ago?
It was 3 years ago.
And how are you faring on that?
That guarantee has been converted into cash. We're currently sitting with a guarantee of 800 million, and we expect that guarantee to be converted into cash over the next 2 years. But obviously, it's dependent on the Land Bank's own performance. So the more we perform, the better the chances that guarantee is going to be converted into cash.
So on that point, what are the risks? Are the risks the global agricultural market, or are the risks management, poor management again?
I think the risks are the global agricultural market. However, the good thing about the SA agriculture is the fact that we've been through a number of different agricultural cycles. As a result, most of the agribusinesses are well diversified, meaning that even if commodity prices start increasing, different parts of the agribusinesses will actually benefit. And when the opposite happens, where commodity prices come down, other parts of the agribusinesses benefit, and other parts actually do not benefit from that increase. So you've got businesses that are well diversified, that are robust, and we think that irrespective of what happens in commodity prices, they'll be fine.
If we talk about the outlook, what's your feeling on the likely performance in the next year or so of farming income?
I think we believe that it's on a downward trend, and that downward trend is actually going to continue. However, what we've seen in the agri sector is that a lot of the agri businesses are integrated in the value chain. So whatever profits the farmers at a primary production level are not making, you end up seeing your processors and guys who up the value chain actually end up benefiting from. And it's out on our side. When we look at giving funding to a specific value chain, we'd look at the point in which we think it's best for us to actually provide funding to that specific value chain, either at an intermediary level or at a primary production level.